Vamp is Visa's new fraud program, and Vamp stands for the Visa Acquirers Monitoring Program. Cardholders said this, merchants submitted this, and if the issuer pushes it forward and it's an invalid chargeback, the issuer actually has to pay that chargeback. So a good way of thinking about this is that it's almost an accountability program, right? If I raise a chargeback, you as a merchant have the ability to send in data that says, well, wait, that's not quite right. And if the issuer still moves forward with that chargeback, it actually lands on the issuer, not on you as a merchant.
Welcome to the ChargeForward podcast by Chargebacks 911, a podcast about fintech and fraud. For those of you unfamiliar with Chargebacks 911, we help merchants prevent chargebacks and recover revenue lost to fraud. I'm real excited because today we have in living color Zach Matthews. Zach is why don't you help me out, Zach? What's your title?
It changes from time to time. So I'm the Vice President of Solutions Engineering and Partnerships, which is just a fancy way of saying that it's my job to make sure that our technology is suited to the outcomes that our customers are looking for. So I make sure that when they're going through implementation that we get everything we need to drive the best outcome.
Well, that's great. And I know one of the things that you've been worrying a lot about lately is the new Visa regulations. Visa, colloquially it's called Vamp, but what does that stand for?
Yeah, so Vamp is Visa's new fraud program, and Vamp stands for the Visa Acquirers Monitoring Program. When we talk about Visa's fraud programs, in the past they were called VDMP and VMFP, and they were two related but somewhat separate programs that tracked your metric. And what Visa's done is they've done away with that and completely re-overhauled the program. In the past, we've talked about changes to Visa's fraud program. I would really consider this like a reset. In many, many regards, it's an entirely new program with an entirely new focus in terms of how Visa's managing things. The call out, or what I would point to, is the word acquirer. Visa is much more focused on having the acquirers have some skin in the game this time around.
You mentioned the focus on acquirers. What are some other sort of differences with the new regulation versus historically how Visa's been dealing with chargebacks and things?
Yeah, so if I kind of bucketed the major changes, I would say that obviously the focus on the acquirers versus the merchants is the first one. The second is that there's an entirely new metric called an enumeration ratio that we've never actually looked at from a formal perspective. We'll dig into that in a little bit, but at a high level, the enumeration ratio is actually a pre-authentication fraud metric that attempts to measure if your website is being used to essentially test cards, right? What it looks at is did the same card number get run multiple times with different data elements looking for the right match? And then I would say the last thing is that historically, the ratio that merchants really cared about, their fraud ratio, was their disputes, TC15s, over their TC5s, which is their card not present transactions. What Visa's done is they've actually added an entirely new metric called a TC40 into that. And now TC40s aren't new. TC40s are fraud notifications. But before, yesterday, if you had a chargeback and you gave a refund to it, that chargeback went away. It wasn't in your ratio anymore. Today, if it's a fraud chargeback, that TC40 is still there. Another way of stating that is that giving a refund to a fraudulent dispute is no longer wiping it off of the board. So merchants that have a problem with fraud are really going to feel the heat when it comes to Vamp.
Why do you think that Visa is making these changes?
So I think that Visa has gotten beaten up over the last, let's call it 10 years from a compliance and regulatory perspective, and they've essentially been accused of taking too light of a stance on fraud. And if you look at it, Visa's always policed fraud. They've always had programs to make sure that merchants were compliant. But I think the accusation at a base level is that the punishment wasn't bad enough. People would still do the naughty behavior and give a refund. So by removing that as a recourse now, it really removes a merchant's ability to participate in the bad activity at all.
Okay. How does Vamp differ from the existing ratios and existing sort of limits that merchants needed to be aware of and sort of the rules that they needed to play within?
I mean, I think the biggest one is that if I talk to most enterprise merchants, they can't tell me what their TC40 number is. They've never looked at it. And so that actually kind of points to some of the inefficacy, right? I think if you have a fraud notification, a TC40, and as a merchant, you don't know what your fraud number is, your TC40 number, that probably implies that the way we were managing those metrics didn't effectively manage fraud. And so today, TC40s are ultimately what most merchants are worried about, because the traditional way of managing your metrics was to refund away or to focus on chargebacks. And like I said before, refunding a chargeback doesn't get rid of that TC40 anymore. If it was a fraudulent transaction, you still have a problem.
Okay, so if a merchant was dealing with too many chargebacks, they just sort of looked at chargebacks as a whole and they wanted to make sure that they were compliant, didn't have too many chargebacks. One of the ways that merchants have dealt with that in the past is through refunds, through the RDR, through the alert platforms. Now you're saying with the TC40, those refunds aren't effective at combating that. So what is there anything effective? Like how do merchants deal with, those fraud TC40?
Yeah, so I think what you're asking is, what is the expected behavior Visa's looking for? A lot of merchants ask me that question, right? So if I'm not supposed to refund it, what am I supposed to do? Well, I think the answer is RDR is still an important part of your toolkit, because when the ratio today is TC15s plus TC40s over TC5s. So an RDR still gets rid of the TC15. You don't want to turn RDR off or you'll make your problem worse. The idea is that you also need to look at a relatively new service that Visa offers called Compelling Evidence 3.0. What Compelling Evidence 3.0 does is, in real time, when a customer is alleging a chargeback, it offers you as a merchant the ability to interject by sending data in real time to refute that claim. And what compelling evidence basically does is it looks at the data that's sent and it says, well, cardholder said this, merchant submitted this, and if the issuer pushes it forward and it's an invalid chargeback, the issuer actually has to pay that chargeback. So the cardholder still gets their money back, which means they go away, they're happy, right? Mm-hmm. All rainbows and sunshine for them. But what's nice is that TC40 is invalidated, the chargeback is stopped, and the issuer is actually punished in a way because the liability for that chargeback is shifted to them. So a good way of thinking about this is that it's almost an accountability program, right? If I raise a chargeback, you as a merchant have the ability to send in data that says, well, wait, that's not quite right. And if the issuer still moves forward with that chargeback, it actually lands on the issuer, not on you as a merchant.
Okay. So now is that just for the compelling evidence, or is that all for the verifies? Because there's other ways to mitigate chargebacks and prevent them before they happen.
Yep.
that aren't refund based, right?
Well, so this actually isn't refund based, compelling evidence, because you as a merchant aren't the one giving the money. Right. So you don't give a refund. The customer still gets one. So compelling evidence is the specific TC40 stopper, let's call it that.
Okay.
Because compelling evidence is invoked specifically when there's an allegation of a 10.4, which
right.
is card not present fraud. Bundled in with that is also Order Insights.
Okay.
So Order Insight is a separate service that is the precursor to compelling evidence.
Okay.
So the way that this works is if you call your bank and you say, hey, I don't understand or I don't recognize this transaction, if that issuer is signed up for compelling evidence and Order Insight, there's a little button they can push, and that requests additional information. Mm-hmm. And that first set of information is going to be things like, well, Jared, you actually bought from this website, and this is what you bought. It's order level information, and the effort there, or the attempt there, is to get you to recognize the transaction and go, oh, my wife bought something there. Oh, I bought something there, but I just didn't recognize it. If that works successfully, you hang up the phone, no chargeback is raised, and it's still deflected. Compelling evidence comes in when you say, no, I still don't recognize that. I'd like to file a fraud chargeback. Mm-hmm. And at that point, if the merchant is able to prove that you have done business with them before without filing a chargeback on those transactions, that actually, according to Visa, is not a fraud chargeback. That would be an unauthorized transaction. And so in that case, the issuer is shifted the liability and the TC40 is stopped because you've proven that it wasn't fraud. You have an established relationship with that customer.
Okay, but similarly, it sounds like the Order Insight would also prevent that from being a chargeback too. It just, not as clearly, right?
Well,
because it happens a little earlier in the process.
Correct.
So, right.
And I think the way that I would kind of encourage everybody to think about it mm-hmm. is that Order Insights is like a real-time data exchange. It's like a new rail for information. And so I would bet This is a Zach opinion, not a Chargebacks 911 opinion, but I would bet that over the course of the next several months to a year, you're going to see new programs like compelling evidence come out. Think about it. What are things that you can disprove or prove in real time using data? And I can think of 3 or 4 other examples. I didn't get my refund. Well, hey, here's an ARN with a refund on it. Duplicate transaction. Well, actually, these were 2 separate transactions. Here's what they bought. All of these are examples of things that can be, again, rectified in real time in a way that allows the issuer to either stop the chargeback by not filing it, or if they do, shifts the liability to them.
Okay, so the basic idea is as somebody contacts their bank in order to file a chargeback, they access Order Insight. Right now, the way Order Insight stands without compelling evidence 3.0 or any of the things that you've talked about, it's still on the cardholder to say, oh, you're right, it's my mistake, and then sort of abort the chargeback.
Correct.
Your supposition or your prediction is that Visa is going to roll out additional rules like compelling evidence 3.0 that allow the merchant to disprove a dispute before it even gets that far.
Correct. And the reason I think that is, right, I used to be an industry analyst. It's my background. I still watch all of the compliance and regulatory stuff because I find it interesting. And what Visa and MasterCard have really been being pressed over the last 5 years is resolving claims more rapidly. Okay. It's actually why we've seen inquiries get yanked back, because Visa and MasterCard said there's not time to deal with a round ahead of a dispute, right? And they pulled it away to get the money back to the customer faster. If you think about a real-time data exchange, it essentially allows you as a merchant to exchange all the information that you would during a representment before one's filed. And so it's a way of throwing a representment out or all the information from it to stop a chargeback.
Is there any changes to the overall chargeback ratio that merchants needed to pay attention to?
Well, Visa would tell you that it went up. But I think if you do the math and you think about it reasonably, right? So under Vamp, there's a merchant ratio and an acquirer ratio. But if your acquirer is in breach, you're in breach too. Right. So the acquirer ratio is lower. The acquirer ratio is 0.5 or 0.7, and the merchant ratio is 1.5 or 2.2, depending on where it's phased in.
Is that total transactions? So if an acquirer has their bread and butter, for example, is sort of taking those merchants that are doing subscription-based billing and all the other things that tend to increase chargebacks. The idea is that pressure from the acquirer may be the thing that gets you canceled, even if theoretically you have a slightly higher ratio to work with.
It's funny that you say that, because we talked about this back in May, over 3 months ago, and I predicted that acquirers were going to react ahead of Visa, right? So October 1st is when everything rolls in. That's until then, Visa hasn't been enforcing any of this. They've just been calculating and telling you your ratio. But I'm aware of about a dozen sponsor banks that have been canceling merchant accounts left and right for people that are over not 0.9, not 1.5, but 0.5. Banks are managing their portfolio to the level that they need to get to. Mathematically, it's the only way that it works. And so, right, if my acquirer has to have a 0.5, I can't sit at 1.5, I'm 3x that. They're going to be all over me trying to manage that downward. And so what I would say is that yes, as a merchant, your ratio has gone up, but there's 2 factors. There's more things in the ratio now. It used to just be TC15s, now there's TC40s, so there's more stuff in the numerator. And then in addition to that, you're managing multiple ratios. And I don't think that the merchant ratio is the one that people need to be worried about. I think that merchants need to be very cognizant that if they're over their acquirer's ratio, they're going to be on their acquirer's naughty list. And that's just as dangerous.
Now, a lot of merchants work through a processor and an ISO, and there's sort of layers. So they're not necessarily with the acquirer. How does that impact the, do you expect there to be sort of a trickle down impact? So that is to say, the acquirer is going to be conservative, and then the ISOs, they're going to have to be even more conservative to stay on the good side of the acquirer. And so but by the time it reaches the merchant, you're going to potentially be losing processing for far less than than you would in the past.
We've worked with merchants that have had to find new sponsor banks for operating over a 0.5. And that is, like I said, 1/3 of what everybody is saying the merchant ratio is. So yes, it definitely will trickle down. And I think you're going to see a particularly interesting phenomena if you're with a processor or a PSP that has a more traditionally high risk portfolio. I think that Visa is trying to, without saying it, but kind of move PSPs away from that approach, right? They want a balanced portfolio. They don't want anybody that's got a basket of higher risk merchants.
Okay, so what is the new ratio for the TC40? So for the fraud chargebacks, how many are you allowed to have before you start to get in trouble?
So 1,500, but again, only at the merchant level.
Okay.
The acquirer doesn't get any exemption, which means they can't pass on an exemption.
So it's a total number. It's not a percentage.
For an acquirer, it's all of your TC40s plus all of your TC15s divided by all of your TC5s.
Okay.
So before Vamp, if I didn't have 1,000 chargebacks, I was immune, which meant that people would go spin up little mids and they'd have 100 mids. It was a strategy. You can't do that anymore because your acquirer doesn't get that, meaning your acquirer is going to say, Jared, you've got 10 accounts with us, and sure, they're all under 1,500, but you're at like a 4% and cancel you. And so that exemption is from Visa. And your acquirer gets no such exemption, therefore they will not be able to pass one on to you. And so I think this goes back to my statement at the beginning, the Visa acquirer monitoring program. Visa doesn't want to be in the business of managing and policing individual merchants. I think they're really trying to position themselves as more of a, we provide the highway, right, the rails, we provide the safeguards, the regulations and the tools, and if the issuers and the acquirers aren't using it, that's their fault. And I think they're trying to push that emphasis on the issuing and acquiring basis to try to, play fairly on the highway, so to speak.
Right. But of course, the merchant's ultimately going to be the one that suffers or that has to, comply with whatever regulations are passed down from the acquirer. So you just said what, TC40 data, TC15, and TC5, is that
Yep.
it? So I'm not familiar with any of those terms. So let's define those terms. So TC40 and TC15, I can tell from context clues that's sort of fraud related, and then customer service or just a regular dispute.
They actually overlap.
Okay.
So if you call your bank and you say this charge is fraud, that file is a TC40 and a TC15.
Okay.
The TC15 is what gets you your money back.
Okay.
The TC40 is simply a fraud flag.
Okay.
So you can actually have a transaction that's a TC40 without a TC15. I know it sounds weird, but that would be an example of you find fraud over 120 days. So something from 2 years ago, you can still report that as fraud. Your bank still wants you to do that. That still generates a TC40, but you're not going to get a refund. So there was no TC15 in that case. A TC5 is any settled card not present transaction. And it's funny that you asked me to define this because many processors don't have these buckets defined and exposed to their merchants to be able to calculate this stuff themselves. So you can go pull a report on sales, but if you've got a mixture of card present and card not present running through it, it's not classified for you to be able to calculate this because again, it's only card not present in your denominator.
Yeah, and so in TC40, it sounds like you're saying that doesn't always even have a chargeback. So how would a merchant, do merchants need to contact their processor, acquirer, whoever they work with on the credit card processing side and ask for it if they can't find it in their control panel?
Yeah, so Visa's actually, at a recent industry show that I attended, Visa had a session with the merchants, and Visa basically communicated that their expectation of the acquiring base is to make this information available, TC40 reporting. Now, talking to the market, it's probably a gap between what Visa's expecting and what's actually out there. But you should contact your acquirer. There's a good chance that your acquirer can provide you this information, but it's going to be batched and it's going to be at the end of the month, which means that it helps you understand, not manage your ratio. The other option is that Chargebacks 911 does also provide TC40 reporting. That TC40 reporting is in real time. The difference between those two is that it allows you to, when you get a TC40, blacklist that customer, stop doing business with them, because what we find is that oftentimes transactions continue after the TC40 and you keep getting TC40s.
Right.
So by not catching it until the end of the month, you've increased that count significantly.
Okay. So that's you mentioned the Chargebacks 911. I know that we've been putting out all kinds of videos on Vamp and banners that we want people to click on, and so talk to us a little bit about we have Vamp reporting. Is that right? So
Yeah.
How are we helping merchants be prepared for this rollout?
Absolutely. So the cool thing about pre-Vamp was that you had one ratio, right? At a mid level. It didn't change across mids, etc. But if you think about it now, your acquirers are managing ratios, which means that you may have different ratios that you need to manage to, right? So far, we've seen it settle pretty consistently at 0.5, but you could have a merchant or a processor that comes out and says, I have a lower risk appetite, or you're not paying me to have a higher risk appetite, and so yours is 0.4. So what we're doing is we've built a fully comprehensive reporting platform that will calculate this at the mid-level and account for acquirer-specific requirements. So it allows a user to open up a pane in our portal, and they're able to see each individual mid with how many TC15s, how many TC40s, and what their TC5 count or TCO5 count is. And so not only do you get your number, your ratio is 0.4, but you also get to see the actual working pieces inside of it. And, right? You can understand, is my Vamp ratio being driven by TC40s or TC15s? Is this mid unhealthy versus these are healthy? And so it's a comprehensive way of looking at it that's in real time. And so what this is it's a literal in real time. We'll update the data as often as we can, depending on the processor. And then that allows you to more proactively manage through this so that you're not chasing it at the end of the month or once you're already on the naughty list.
So are acquirers, are they being pretty transparent in what their policies are? How are they dealing with that? Is it just sort of like a wait and see type of thing?
It's a lot of wait and see. I would say that if you look across the acquiring landscape and kind of classify acquirers into your traditional, very, very risk-averse players like JPMC, WorldPay, I think they're moving a little bit slower on making decisions because their portfolio is just a bit lower risk in general, would be my guess. I don't have the numbers in front of me, but going off of these companies and who they typically do business with, when you start looking at higher risk processors, I'm not going to name names, but right there are a bit more of a reactionary response. I think what we're noticing is if an acquirer is sitting down and going, whoa, I have a lot of work to do to get to the 0.5, they're being a bit more reactionary. And so as I've mentioned, we have had acquirers, processors, and sponsor banks yank back processing. And the reason I'm saying sponsor bank is that in the case of a processor, right, someone using someone else's acquiring license, it's that bank that makes that decision. And so we've actually had some really interesting interactions where a PSP's gone, hey, Jared, we actually have to close your mids on this bank. We'll help you get new ones on a different bank, right? So you can still work with your PSP, but the bank itself that's extended you that merchant account is saying, we don't want to do business with you anymore. And those conversations have been going on for 60, 90 days, which is a full 3 months ahead of the actual rollout of the rules.
TC, do we know what that stands for?
I should know what that is, and I don't offhand, actually.
I assume that there's TC3s and TC7s and TC8s.
There's not not all of the numbers are covered as you'd expect. They tend to be end in 0 or 5.
Oh, okay.
Right, so TC5, 15, 40.
Okay.
Now I'm actually, so we're going to pull this out and I'm looking this up because I hate that I don't know that. Yeah, so TC stands for transaction code, and it's just essentially Visa's way of classifying transactions. So as an example, a TC15 is a card not present transaction. So the classification code, it's a transaction code 15. That's just their way of referring to that type of transaction. The most common ones are going to be TC40s, which are fraud, as we've discussed, TC15s, which are disputes, and TCO5s, which is CNP, settled transactions. Okay. There are also designations for declines and things of that nature, but it's essentially Visa's way of classifying a transaction.
Has the ratio always been categorized by card not present? Or because I think, the local, pizza place or whatever might have a lot of card present transactions, and then they start to get more card not present because everybody's using apps and things like that. Currently, do the card present transactions dilute the card not present, or has it always been the ratio is within card not present?
So it's a change with Vamp that it's card not present. In the past, there's been, they have changed it back and forth. Where it was before was that it was all of your transactions. And so to your point, that's actually another place that merchants are having either unrealized problems, meaning they're not recognizing that it's a change and it's only card not present now, to your point, if you run a mix of transactions. Or it's just not exposed to them, right? Like where they're getting their information, they just get one bucket of information. They don't get broken out by card present, card not present. Okay.
So so talk to me about the order insight. What is the threshold, or how, if I'm a merchant and I'm wondering if this is the right solution, how would you recommend that they think about it?
Yeah. So I think obviously transaction volume is going to be part of it. If you don't have, because it requires an integration, right? So if you're a real small shop, it may not be for you in general, but there's an asterisk on that. So again, not a shameless plug, but one of the things that I'm quite proud of, because it's one of the things that I'm personally responsible for, is Chargebacks 911 actually partners with merchants to make it easier to access compelling evidence and order insight. The way we do that is that instead of making you respond to those calls in real time, which is the way that service is delivered from Verify. So in order to qualify and be eligible for compelling evidence and order insight through Verify, you have to be able to receive a notification, find the transaction associated with it, and send back the right information within 2 seconds. And that's a very high technical skill cap for many merchants. What Chargebacks 911 has done is we've said, hey, if you give us a copy of your data, we'll be the one that handles receiving the alert, finding the transaction, and responding in real time. And so by partnering with Chargebacks 911, it allows a merchant to only have to get us the data once per day versus in real time. And so I think that's a really important thing is that there's a perception in the market that the integration cost of this is much higher than it actually is, because it's quite a bit easier to say, hey, Zach, here's my data once a day versus having to do it in real time. And the reason it's much easier is twofold. Obviously, not real time is easier, but then also the way that you can get it to us is easier. You can send me a flat file. You can make API calls. And so again, the ability to engage with less technical solutions to get us the data is a really big piece, because you send us the data, we wrap it in the technical packaging that's needed to meet the service, and now you can qualify. So that's a long-winded way of saying that I think there's a perception in the market that this service is less available than it is when it's delivered the way that we do it. The bigger thing is making sure that you capture the data from the customer at the time of sale, right? And so what we find is that very often merchants are not saving things like IP address, device fingerprint, and device ID, which are ultimately the cornerstone of this data exchange. Because what Visa's saying is that it's not just enough to say, hey, this same credit card was used in 4 transactions. You have to triangulate it along other data points like IP address, which allows you to say, hey, it was the same credit card from the same phone, as an example, which again casts a much tighter net in proving that the same cardholder was involved in the purchase.
What should merchants do right now? So if they think that they have a TC40 problem, if this is something that maybe their acquirer has said, hey, you're kind of on the precipice of having a problem with us, what should they do in order to make sure that they're compliant and they have processing in October and beyond?
Yeah, so I think the first thing, and apologies for calling this out, but you're a little behind the 8 ball if you haven't done this already, but talk to your processor or acquirer. Have a conversation with them about what the expectations are. If they can't communicate to you what the expectations are, you will probably still want to be proactive in talking to them about what it is you're doing. There's been lots of merchants that we've worked with actually that we've helped them put together like a risk mitigation plan, because at the end of the day, that's where this stuff goes. If you have a nice acquirer, they're not going to come out and say, hey, you're canceled. They're going to come out and say, hey, I need you to put together a plan. What are you doing to become compliant? And so, right, have a conversation, talk about that plan, and then let's talk about what are the steps you can take to become compliant. Make sure that you've got a TC40 report. If you don't know what your TC40 number is, you're flying blind. And here's what I would say. because historically merchants have paid attention to TC15s, not TC40s, the majority of most merchants' ratio is being driven by TC40s because they're refunding. They already have a strategy for the TC15s. And so get that report as quick as you can, ideally in real time so that you're not managing out of the rearview mirror right at the end of the month. And then secondly, evaluate your ability and eligibility to qualify for compelling evidence and order insight. Because ultimately, the only way right now to stop a TC40 or a claim of a TC40 is compelling evidence. And so even if you don't have the data today, have a conversation with an expert like us at Chargebacks 911 and evaluate that gap. Because a lot of times, right, I've been working with merchants for a year at this point that have been getting ready for compelling evidence, because you have to store the historical data. It's not something you can just turn on and have tomorrow. It takes time. And so I've been talking to merchants for 6-9 months about the idea that Visa's been giving you time to get ahead of this. So urgently, I would say talk to your acquirer, get a TC40 report, and look at your eligibility for order insights and compelling evidence. And if you're not eligible, don't just say, oh, well, I'm gonna be okay without it. Start having and evaluating what you can do to get those data points in place and qualify at some point in the future.
Okay, and so to get in touch with Chargebacks 911, they go to our website. Is that the best way?
Yep.
Chargebacks911.com. There's a form on there. You can give us a little bit of information about your company, and then Zach or another chargeback expert will reach out. And we'll take a look at your data. We'll make sure that you're in a good position. And if there's something that we think that we can do, then we'll let you know. If there's not anything that we can do, then we'll let you know that as well. But with this change, and I assume MasterCard's probably going to come out with some changes in the next few months, and then Visa's going to come out with some more changes. But working with a partner like Chargebacks 911 really puts you in a good position, not just working with us to prevent chargebacks and recover revenue lost from fraud. I mean, those are two very good value propositions, right? But also being in a position to have access to the expertise so that when these changes roll out, you make sure that you're on the right side of the fence and make sure that your business doesn't struggle because you weren't aware or weren't prepared for the implications of all of these regulation changes.
100%. And I think what I would say is, yes, MasterCard is probably going to have a response that will mirror Visa's. What they like to do is both of them like to sit and watch the other one, see how it's going and kind of bide their time. And what I would say is be careful of moving your business to MasterCard or making a shift that way because they haven't done it yet. They will at some point. And so, right, again, I think I'm very, very concerted in stating these changes are coming. If I look at what Visa's changed in the last year while we've been discussing Vamp, it's been timelines and the amount of money you're going to be fined. It's not been whether or not it's going to happen. It's not been the ratio itself. It's really been about when is it coming and how bad is it going to hurt, not whether or not they're going to do it.
That's right. And it isn't always just the Visa regulation, as we talked about. It's the impact on the acquirers, and sometimes the acquirers overreaction, or they're dealing with hundreds, thousands, tens of thousands of merchants, and so their calculus is something that you need to keep in mind, and making sure that you're not one of the merchants that they look to when they want to thin their portfolio, or when they're trying to make the changes in order to comply or be super safe. So.
And to that point, that's why I recommend having a proactive conversation with your processor, because a lot of underwriting departments are looking at things and you're just a number in a spreadsheet. If you haven't reached out to the human that manages your account and had a conversation about how you're concerned about this, working on it, and this is your plan, you're at a disadvantage. And that can be the difference between you getting a notification where, hey, we're reviewing your account and we need to talk to you about a risk mitigation plan, or you just getting a cancellation notice. And so again, I emphasize this strongly, have a proactive conversation, because ignoring this is not going to work out in your favor.
Yeah, I think that's really good advice. All right, Zach, well, I think that's it. Is there anything else that you want people to know about Vamp? I'm not sure if I asked all the right questions or not, but if there's...
The only thing that I would touch on that I think is again, being avoided by people because they don't understand it is the enumeration ratio. Mm-hmm. And so the enumeration ratio, right, again, is that and ironically, high risk merchants, the ones with chargeback problems, are not usually the ones that are subject to enumeration attacks. Could write a whole blog about why that is, but enumeration attacks usually target enterprise merchants that have a much sturdier payments flow because they need to test, right? I need to be able to figure out what Jared's zip code is. So I only want the transaction to go through when I put the right one in. And so stronger controlled payment flows are usually the ones that are subjected to enumeration attacks. If you are breaching on your enumeration ratio, it's all the same penalties and fees as breaching on your chargeback ratio. And so the plug that I would give to this, we don't need to talk about it at length, but Chargebacks 911 actually just partnered with a technology company called Seaside Dev. Seaside Dev it stands for client-side dev, but they focus on helping prevent client-side dev or script attacks. And so they live in the pre-auth space and have a natural affinity for identifying right as people are typing things in, whether they're enumerating through stuff to shut that down. The statement here is I would strongly recommend that everybody take a look at their full payment stack. Fraud filter, what are you doing to fraud filter, right? Like what are you doing to stop it at the door? And then what are you doing after it's through the door? And those are two different equations.
Those are all really good points. So the enumeration attacks, is there data on that merchants can see right now? Is that something that acquirers are sharing, or is this another thing?
So acquirers actually wouldn't probably be tracking that. Visa, right? So when you send the transactions in, Visa's obviously able to say, oh, well, this same card number came through with 4 different CVVs, enumeration. The problem is that in real time, how do I identify that Jared's doing that when he's doing it so I can stop sending the payments?
Right.
And so your acquirer is not really set up to be able to do that. You really need something that lives and breathes on your website and is running while your payments flow is there. So that if I am enumerating, it says, aha, stop. And instead of sending that payment to Visa, it kills the payment form.
Okay.
And so it's a harder problem to solve. Ironically, it's much easier for Visa to report out on and say, Jared, you have an enumeration problem, than it is for you to recognize it in real time and stop it. And so this is, again, it's a problem that I think is going to impact enterprise merchants more than the rest of the environment. But it's definitely something that if you're not paying attention to it, you might wind up with a nasty bill.
So you're saying Visa might call you out, but is that through the acquirer? Is it the same?
So this is actually a merchant direct one.
Okay.
So this would be Visa. Visa is measuring the acquirer is not involved in the enumeration ratio. That is between Visa and the merchant. And again, I think that's signatory or indicative of Visa really trying to tamp down on and lower the threshold for fraud across the board, right? It's no longer okay to let it through and then give the money back. They want to stop it at the door, and they're really trying to hold people accountable to that because, again, card testing is a really, really important part for a fraudster to be able to go and do the naughty things that they do.
All right. Well, I hope we've given you a lot to think about. Thank you so much, Zach, for being here in person.
My pleasure.
This is the first time that we've done an interview like this. It's a little cramped, but it was a good experience, and I enjoyed talking to you today. We're going to try to get this up by October 1st. We're a few days out, so we're going to be real fast editing and trying to get this up so that it's available to merchants, as Vamp rolls out, and hopefully it'll be a good resource whether you contact Chargebacks 911 or not. But with experts like Zach, I don't know why you wouldn't want to reach out to us. So thank you guys for joining us. Until next time.
Thank you.